When you look closely at the July report from Greater Vancouver Realtors, condo sales didn't just ease off. They led the entire pullback, tumbling nearly 18%. The benchmark condos once again slipped to 688,000, while total active inventory sits comfortably above 16,000 listings. That's nearly 27% higher than our 10-year seasonal average. What that creates is a classic one step forward, one step back pattern. Casual buyers get spooked and retreat to the sidelines, but serious opportunists move right in. Here's where the hidden setup lies. Many condo sellers listing today are emotionally attached to peak prices from a few years ago, or they got overconfident during June's short-lived spike. But with sales to active listing ratios sliding near buyer's market territory, seller fatigue is rapidly setting in. High carrying costs and burning through cash, inventory is building up, and seller motivation is quietly shifting from let's test the market to let's just get the thing sold. For strategic buyers, this quiet shift is pure gold. While everyone waits around for lower interest rates or positive headlines, you have a rare open window to negotiate aggressive terms and practically write any subject under the sun in your contract and lock in prime real estate prices thought to be out of reach a few years ago. To understand why condos took such a heavy hit, you have to look at the supply side of the equation. In July, new listings reached 5,097 units, a 3.2% increase year over year, bringing total active listings in Metro Vancouver to over 14,300 homes. That puts total new inventory nearly 23% above the 10-year seasonal average. When you pair surging inventory with slumping sales to active listings ratio, the metric that dictates who actually holds the cards takes a direct hit. Overall, the market ratio dropped to roughly 15%, moving firmly into the balanced territory. But for the condo segment specifically, it stepped straight towards the buyer market territory, hovering below 12%. Naturally, price trends lag behind momentum, but they're already starting to reflect this shift. What's happening in real time is a massive shift in seller psychology. Owners who listed in June expecting quick bidding wars are now sitting through weeks of silence with carrying costs piling up. And that growing gap between a seller's anchored expectation and a buyer's newfound leverage is precisely where the best deals in the entire market are being made right now. And here's why that standoff is so fascinating and dangerous if you're misreading it. On paper, when sellers pull back at the exact same rate as buyers, you get price stagnation. Benchmark prices stay relatively flat, hiding the real friction underneath. But underneath that calm surface, the clock is ticking very differently for each side. For buyers, time is actually working in your favor. Borrowing costs might still feel restrictive, but the overall inventory choice remains vastly better during the panic buying years. You aren't competing in multi-offer blind auctions every weekend anymore. You have room to breathe, conduct proper due diligence, even go subject to sale in some cases, and negotiate standard protections without the fear of getting instantly outbid by someone else. For sellers, especially condo investors who bought near the peak with tight margins, time is a brutal component for you. Sitting on your hands sounds reasonable in theory, but holding a vacant or cash flow negative unit in Metro Vancouver costs thousands of dollars every single month. Between mortgage renewals hitting significantly higher rates, rising municipal property taxes, and soaring strata fees, levies, holding out for peak prices is a luxury that gets costlier by the day. Eventually, someone in a standoff has to blink. And in a high carrying cost environment, it is almost always the over-leveraged seller who breaks first. They might not drastically slash their public asking price on day one, but behind closed doors, they become remarkably open to aggressive counteroffers, flexible closing terms, and seller concessions just to stop the financial burn. This is precisely where the disconnect lives. While casual observers often look at the sales volume and assume the market is completely frozen, experienced buyers recognize that low liquidity paired with high holding costs create hidden pressure points across every neighborhood in the city. Which brings us back to where we started. That condo owner about to list their unit today for peak prices, they're looking at the headline benchmarks thinking everything is steady, completely unaware that buyer sentiment has shifted to total patience. If you know how to identify motivated sellers whose carrying costs are catching up with them, the standoff isn't a dead market. It is the single best negotiating setup in Greater Vancouver for 10 plus years. Most market updates stop right around here. Throw out some sales numbers and price number and call it a day. I'm not going to do that because there's one ratio buried in this data that tells you far more about where prices are actually heading than any single month of sales figures ever could. It's called the sales to active listings ratio. And once you understand it, you'll never read a market update the same way again. And why is this metric so crucial? Raw sales numbers only tell you half the story, and active listings tell you the other half. The ratio represents the actual real-time tension between the two. measuring the pace at which inventory is being absorbed by the buyers. Think of it like a bathtub. Listings are the water from the faucet and sales are the drain. If the drain is open but the faucet is just a trickle, urgency builds up very fast. The rule of thumb here comes straight from the historical analysis Greater Vancouver Realtors themselves published. When that ratio drops below 12% and stays there for a sustained period, it tends to put downward pressure on the prices. When it climbs above 20% and holds, it tends to push prices upward. Anywhere in between, and you're essentially looking at a balanced market with no strong directional pull in either direction. Metro Vancouver's overall ratio for July came in at 13%, broken down by property type. Detached homes sitting around 10.5%, which is a solid buyer's market. Townhouses, duplexes sitting at 15.8%, putting that segment in a balanced territory, but leaning slightly towards sellers. Condos sitting right at 14%, which is also balanced. What that actually tells you is genuinely interesting because detached homes are quietly the most buyer favorable corner of this entire market right now, even though the detached sales didn't drop nearly as hard as the condo sales did. Meanwhile, duplexes and townhouses are functioning about as close to as normal as a healthy real estate market as you're going to find anywhere in Vancouver in the moment. And let's look even closer to that condo number. Condo sales may have taken a significant hit recently, but because that ratio remains around 14%, it proves that owners aren't panic listing their properties. Inventory hasn't skyrocketed enough to overwhelm the reduced demand, keeping prices surprisingly sticky across the board. And for anyone that's currently navigating this complex landscape, this is the exact nuance you desperately need. We aren't seeing a crash. Rather, buyers and sellers are locked into a quiet standoff, waiting to see who blinks first. And if you're planning to make a move soon, this ratio is ultimately your absolute best compass. Now let's get into the number everyone actually clicked on this video for. The MLS Home Price Index Composite benchmark price for residential properties in Metro Vancouver currently sits at $1,088,000. That's down 6.2% compared to July of last year, and down almost 1% compared to just last month. But here's the context that matters, and it's important not to skip past it. Andrew Liz was clear in the release that this isn't a market that's catering. His exact framing was that with sales stuck in a holding pattern, there isn't a significant price pressure showing up yet in either direction, with prices down roughly 1% in July. That's a market drifting, not a market collapsing. Let's go through the property types individually because the story is not identical across the board. Detached homes carry a benchmark price of just over 1.8 million right now. That's down 7% year over year and 1.1% from June alone, making detached the segment absorbing the biggest annual price hit of the three. Townhouses and duplex homes have a benchmark price of $1,030,000, down 6% year over year, down 1.5% just from June to July, which is actually the steepest single month drop of any category this month. And apartments are sitting at a benchmark price of $688,000, as I mentioned, down 7.5% year over year and down 1% just from the month before. That 7.5% figure is the largest annual price decline of any property type. And it's landing on top of that nearly 18% collapse in sales volume we just talked about earlier. So here's the uncomfortable truth if you happen to own a condo in the city right now. Condos are getting squeezed from both directions at once. Sales down almost 18%, prices down 7.5%. That combination makes condos the softest, most pressured corner of the entire Metro Vancouver market at this exact moment. Zoom out from the regional averages for a second and look at what's happening in individual submarkets, because the picture gets a lot more interesting and honestly a lot more useful if you're trying to make a real decision. West Vancouver detached homes carried a benchmark price of just under 2.9 million, down 8.7% year over year. Zoom out even further and West Vancouver detached prices are down staggering 19.8% over the past 10 years on the price index. That's not a typo. It's not a 1 month blip. That's a full decade of West Vancouver detached values essentially going nowhere but down. Vancouver West condos are down 10.6% year over year and down only about 1% over the past 10 years on the index, meaning that specific segment has basically flatlined for a decade while other parts of the region move substantially. Now compare that to a place like Squamish, for example, where condos are up 99.4% over the past 10 years. Or Maple Ridge, where apartments are up 96% over the same stretch. Same region, same news release, same headline number for the whole Metro Vancouver, but two completely different 10-year stories depending entirely on which neighborhood you're actually looking at. If all you're paying attention to is the single composite number for Metro Vancouver as a whole, You are missing what's actually happening in your specific corner of the city. And that gap could be the difference between a good decision and a genuinely costly one. Now let's take a breath for a second, because I did promise you this ends somewhere positive. And this is where it actually starts. Look at the 5-year trend across detached, townhouse, and condo prices. All three ran up hard in 2021, 2022, corrected through 2023, ran back up a little, which was short-lived in 2024, and have been gently drifting lower ever since. What we are living through right now is that same gentle drifting lower phase of a cycle that is already repeated multiple times over just the last 5 years. This isn't new or unusual behavior for this market. It's the same rhythm showing up again. And if you zoom all the way out, Vancouver's residential average sale prices from 1977 through today tell an even clearer version of that same story. Detached average prices went from under $100,000 back in the late 70s to almost $2 million today. And yes, that's down from the 2022 peak, but look at the actual shape of that chart across 50 years. Every single correction on it, 81, 94, 08, 2012, 2018, looks absolutely terrifying while it's happening and looks like a brief pause once you're standing 5 years on the other side of it. Historically speaking, what we're in right now looks a lot more like a pause and a collapse. This is the part that actually matters. So let's talk about what this means depending on which side of the table you're sitting on. If you're a buyer, you have leverage in this market that you haven't had in years. Detached homes are sitting at a 10.5% sales to active listing ratio, which is genuinely a buyer's market territory. Full stop. Inventory across the region is 26.8% above its 10-year seasonal average. Sellers are motivated, and condos specifically are down 18% in sales, with prices still sliding on top of that. This is a real, honest window to negotiate hard, particularly on condos and on detached properties outside of the very hottest micro markets. And don't wait around for the headline that says the market is officially back, because by the time that headline exists, this leverage will already be gone. If you're a seller, the most important thing you can do right now is price to the market you're actually in, not the market you remember from 2022. Duplexes and detached homes in the right neighborhoods are still moving at a reasonable price, with townhouses down barely 1% year over year. The sellers who get stuck and sit on the market for months are almost always the ones who anchored to last year's number. Price realistically, and you're still selling into a market that closed over 2,000 deals last month alone. And if you're an investor, this is one of those setups that looks like a warning sign on the surface, but reads very differently once you understand the history behind it. Corrections in the city have a long track record of getting absorbed rather than repeating forever. And every single dip in that 50-year chart eventually turned into a launching pad for the next run higher. Condos are currently the most beaten down asset class in the region, both in price and sales activity. And historically, that exact combination has often preceded the next upcycle rather than start of a longer decline. The move here isn't to wait around for certainty, because certainty means discount you're looking for has already disappeared. So no, Vancouver real estate did not fall off a cliff in July. It took a step back after a strong June, exactly the way the market has done before, and exactly the way the data itself suggests it typically does. The scary headline is real. The scary outcome isn't. Sure, we saw a roughly 10% drop in home sales last month compared to a year ago. The media loves to latch onto that 9.8% drop, trumpeting that we are hovering 18.6 below the 10-year seasonal average. But when you actually unpack the Greater Vancouver Realtors data, it tells a much calmer story. We are sitting on roughly 16,400 active listings, which is a healthy supply, giving buyers the breathing room they desperately need without catering prices. The composite benchmark price barely nudged, dipping just 0.9% from June to sit around $1,088,000. That is not a crash, that is stabilization. It's the classic one step forward, one step back dance we've been tracking for years. June brought a surge of demand across all property types, and July just naturally took a breath, like it does, usually. Sellers pulled back slightly, took a break, took the property off the market, new listings normalized right on the 10-year average, and the market found its footing. So if you're a buyer sitting on the sidelines waiting for a total market collapse, you are playing the losing game. And frankly, the fundamentals driving this housing market remain incredibly resilient and strong today. And if you are watching this and thinking, okay, the numbers make sense, but I actually have no idea which part of the city I'd even want to live in, go check out the video I did called If I Were Moving to Vancouver in 2026, I'd Move Here. I go neighborhood by neighborhood and break down exactly where I'd plant myself if I were starting fresh in the city right now. Budget, lifestyle, commute, all of it. Given everything we just went through today, that video is honestly the perfect next stop, because knowing the market is only half the equation. The other half is knowing where in this market you actually want to be. I'll drop it right here in the description and go watch it next. Thank you.